Right. So in the last session, we have discussed about, I think, a financial statement analysis, right? So financial performance, all that. In today's session, we are going to discuss about an IPO process, which is called initial public offer. It stands for IPO stands for initial public offer. Let me write down here. Please be on. So which is called initial public offer. So the introduction about initial public offer was discussed earlier also. I have discussed with both of you. But let me give you a high-level overview, then I'll get into the next one.
Okay.
So initial public offer is a process where any organization wants to transform themselves from the private limited to public limited. Generally, they have to process the IPO. Any organization, if they want to transform towards the limited to the public limited company, because the advantage in public limited company for any organization is to acquire funds from the public through stocks, selling stocks, etc., so that that money can be useful when they want to expand the business usually, right? So why public limited? Because we'll have an option to expand businesses by gathering funds from the public by issuing stocks. So when there is a stocks which was issued to the customers, whoever has bought, those customers will be the shareholders. Usually there is a concept called shareholder. Person, whoever is having share, whoever has bought the share for that particular organization, they'll become a shareholder. Of course, irrespective of the quantity, because some people have major shares, some people may have minor shares. So initial public offer is this. Now, if any organization wants to become a public limited company, if they want to go for an IPO, there is a process which normally an organization has to follow. This is not something will be done by the organization on their own. The reason is organization have an entrepreneurial experience, but to initiate this part, they require some third party who has to run this IPO process on their behalf. Because if you see, if you can see over here, I have just mentioned, right? IPO roadshow marketing, right? So the pricing, right? At the same time, these are the two areas. Of course, the remaining areas are important even. But roadshow marketing and as well as pricing and all everything must be done by some expertise people. This cannot be done by the organization on their own. Normally, this is where generally this investment banking companies come into picture. This is where generally this investment banking people come into picture. So investment banking companies' responsibility is to manage IPOs, right? IPOs, because they works as a consultant for organizations so that they will be doing the IPO process and all everything on their customers' behalf, right? This is what generally the concept of IPO. Now, any organization wants to go for IPO, there are some procedures which normally we follow. Let me explain you the procedure, then I'll explain the detailed part of it. The first one is called proposal creation. This is the first one. You can see, right? This is the first one, proposal creation. Next, followed by this underwriting section will be the second one, followed by the team assembly. Next, we will be called as SEC filings. Next, roadshow marketing. 6, pricing. 7, trading. 8, post IPO, right? So these are the different stages will be there for any organization wants to apply for an IPO. So whenever they have applied for an IPO, people whoever is interested on that IPO, people can apply. They have to apply, right? So you cannot directly buy shares for IPO because there will be an allotment happens. For that, we have to apply. Once the application was processed, the allotment will be done based on the availability to the people, because sometimes some people won't get the allotment, right? Some people get the allotments, so subject to terms and conditions, because when we filed application, it is not guaranteed that IPO will be allotted. Depends on the uh, kind of requirement that IPO has in the market and all, everything allotments will be done. But to do the allotment and all, there is a limited minimum number of shares has to be purchased, which normally we call it as lot. We call it as lot, right? So lot consists of multiple shares, okay, multiple stocks, right? So this is what generally, like this, there are multiple lots will be there, which people have to buy, right? So this is what generally IPO process. Now, in this IPO process, the first one is called proposal creation, right? So normally this proposal creation is what generally in investment banking terminologies is called book, right? You can write down. Mohsin?
Yeah.
Please
Just a
make a
moment.
note. I'll tell you, please make a note.
1 minute.
Please make a notes of it. It's always better if you can write in notes for this so that you can understand better. Please write down. First process is called proposal creation. Under that, you write down. Developing a proposal. Developing a proposal for any of the client. Developing a proposal for any of the client is called book. Is called book normally, right? The terminology which normally we use called book. Book means developing a proposal. That is what generally we call it as a book. Normally, this book consists of, write down, this consists of, this consists of company's business plan, financial situation, and investment opportunities. There is some other point I will tell you later. Let me explain this to you. Right. So when you talk about proposal creation, as I told you, investment banking companies will work on their client behalf. Whenever they are working on their client behalf, normally what is that they have to do? First of all, they have to outline the company's business plan. So when the business plan will be existed depends on the profile of the organization, because last time also I told you, organizations will be for different they will be from different domains, right? So different sectors of the business these people are belongs to. So based upon the organizational profile, based on the kind of business goals and objectives what an organization wants to achieve, generally this company business plan has to be known, right? So to have a company's business plan, as I told you, having an idea over business goal, objectives, strategies, by understanding all that, right? So having an idea over the business goals, objectives, and strategies, all that. Normally, this business plan will be made. Understood, Mohsin, Avich? Clear, right? Listening?
Yes.
Yes.
Right. So when there is a business plan to be prepared, so business plan is not something which is instant. Business plan we have to make. If you want to make a business plan and all, we need to have an idea over the business goals, objectives, and strategies of the organization. Whoever wants to apply for IPO. This is point number one. The second one is called financial situation. Last time also I told you the same, right? So financial situation. This is where generally this financial statements analysis and all everything will be done. Means based on the profit and loss accounts, based on the balance sheets of the organization, how profitable this organization is. This organization, how profitable they are. Since how long this organization is making profits, and what are their assets and liabilities, followed by the current assets, current liabilities, right? Operational expenses. All these things will be evaluated under the financial situation. As I told you, there will be an account team, finance team will be there who will be looking after all that. Being a business analyst, we should have an idea over the financial situation. What is that and how is that we do, right? So whatever the requirements and all everything will be given by the BA. This is what we have discussed in the previous session. Next, about the investment opportunities. Investment opportunities means how this can be invested, right? Because organization has applied for an IPO for business expansion, right? They're going for a business expansion. For example, if that was their business goal, what kind of investment opportunities they have in future is what is required. So because clarity over the reason behind going for IPO should be known for an organization first, and that must be evident and that must be clear to the investment banking firms also. So it is always important to know about the investment opportunities. What are the investment opportunities and what exposure an organization has for a business expansion or investment opportunities and all everything is what generally done in the first level. So this is the first case where we talk about first step, which is called proposal creation, where before an organization wants to go for and file for IPO, there is a development of proposal has to be prepared by the investment banking companies. This is what generally we call it as book. Now, once that proposal documents and all everything, which is called book, is completed, then this will be sent to the potential underwriters. So why underwriters are required? Mostly average, because I explained this earlier also. Now here is a question: why it has to send to the underwriters? What was the reason behind that? Why do
for analysis?
Analysis of what?
Like audit,
Risk.
they conduct the auditing of the organization.
It's not auditing. It is nothing to do with auditing. What underwriters do? Underwriters' responsibility is to evaluate the risk. Understand?
Oh,
Right? Underwriters' responsibility is to evaluate the risk, whatever the possible risk which is involved. This is what generally underwriters will take care of, right or not? Right? Because, for example, what is the risk which is involved in it? For example, if this organization wants to file an IPO, is it really worth enough to file an IPO or not? Right? So based on the financial statement analysis, based on the business proposal, they are trying to identify the risk, right? What are the possible risk and all everything will be done by the underwriters. This is where generally this risk assessment will be done. Understood? Mohsin?
yeah.
Right? This is where generally we talk about risk assessment. This risk assessment generally done by the underwriters. Underwriting team means underwriters will accept, because last time also I have given 2 examples to you. For example, if someone has applied for a loan, right? Whether the loan to be accepted or rejected, on what basis? Based on the CIBIL score, based on the income details, based on the discipline or the repayment of the loans and all, everything are important, right? So based on that, whether loan can be provided for a particular individual or not will be decided by the organizations. The back-end decision will be taken by the underwriters. This is point number 1. Point number 2, this is in reference to banking and financial services. Now, the same job of underwriters will be there even for insurance companies also. Insurance companies also. What was that? For example, a person has applied for an insurance because he wants to insure for his property or etc. etc. So for that, what they do, they have to submit a proposal, right? Really, stating that I want to be insured for so and so purposes. Whether an insurance plan or a policy can be accepted for that particular individual, either it can be health, it can be life, it can be property, right? It can be a marine insurance, like it can be a cargo related, right? It can be a vehicle, all that, right? So whatever the kind of insurance is, whether insurance policy can be given to that particular organization or for an individual will be decided by the underwriters, because they are the one who will be doing this risk assessments and all, everything over here. Understood? Mohsin, Avich?
Yeah.
Right or not?
Yeah.
Right? So risk assessments will be done once the understanding over the financial situation, business plans and all that. There must be a risk assessment and risk identification, risk analysis has to be made by the underwriters, and they have to give a report on that. Right? That is essentially important in the first level. So once the proposal, whatever the proposal was submitted, once it is sent to the potential underwriters and all, underwriters will do the risk assessments, all that. From there, usually this is where the real investment banking work will be continued here. This is where generally banks want some people who has to manage all this. This is where generally investment banking companies do. Please write down. Please write down. Please
On the team assembly.
Please write, continue writing.
On the team assembly, this point.
Under the proposal creation. Under the proposal creation. We are in the first point only. Right?
Okay. Okay.
Right? Once the book was completed, that will be sent to the underwriters for risk assessment. That will be sent to the underwriters for risk assessment.
Yeah.
Okay. Followed by that, organization has to, or else company, whatever the name, organization has to identify an investment banking or securities firm investment banking company or a security firm which will help to sell the stocks to the investors, which will help to sell the stock to the investors, right? Right or not?
Yeah. Yeah.
Right. This is where generally the first one, which is called proposal creation, will be done. This is the first level. So once the proposal creation done, the next one is called underwriting selection, right? So because here, as I told you, we have to send this to the potential underwriters, right? That's what I've said, right? In the second point, write down the second point, underwriter selection.
Okay.
Second is, we have sent the book to the potential underwriters. That is what we did in the first level. Underwriters
Okay.
didn't do any risk assessment. That will be done in the second level. Okay. Underwriter selection. Write down. Once we have identified, once we have selected the underwriters, risk assessment will be made by them. Risk assessment will be made by them, and they will come to an agreement, agreement that purchasing the shares or buying the shares, you can write this, buying the shares from the company, at a set price, set price, set price means offer price, because for every share there is an offer, right? There will be some amount of offer will be mentioned here, right? So offer price, for example, stock price, each and every stock will be 2 rupees or 5 rupees or 10 rupees, right? So generally stock price has to, that's what generally we call it as offer price. Understand? Clear? No sin?
Yeah.
Right?
Yes.
Next, third one.
Yeah.
Team assembly. Right down. Team assembly. In this write down. After the underwriting agreement is done, the IPO team, consists of investment banking firms, legal consultants or lawyers, whatever you can say, legal consultants and accounting people will work on necessary paperwork, whatever is required,
Required.
for that they have to make SEC filing.
SEC.
SEC filing. You can write. So you can see here. SEC filing. Make SEC filing. SEC
Yeah,
filing.
Fine. So what does that mean?
SEC means write down. Securities and Exchange Commission. Securities and Exchange Commission, which is called SEC, stands for Securities and Exchange Commission, is called
SEC.
SEC. Understood, right? SEC filing.
Yeah.
Because they have to file in SEC security, because as I told you, right? Because they have to file it in as I told you, they have to file in SCBA, right? CBA, as I told you, right?
Yeah.
Stock Exchange Board of India, right? So that's what, from the context of Indian context, I am saying. If it is out of India, usually they'll have their own security exchange boards where they have to apply for. For example, in Indian context, it will be NSE. Company can be listed on two things. One is in either they can invest on NSE, which is they can list their company in NSE, which is called National Stock Exchange, or else they can invest on BSE, which is called Bombay Stock Exchange, right?
Yeah. So I guess the
It
Bombay
is
Stock
US and all, it is called NASDAQ.
as well. Yeah.
Understand? Clear? Right?
So like Bombay Stock Exchange is bigger than National Stock Exchange, right?
Not like that. Not like that, because some companies will list their listing their companies and all everything in Bombay Stock Exchange, because Bombay Stock Exchange BSE is more focused towards trading kind of, because Bombay Stock Exchange more of trading, right? Fast tradings will be done on Bombay Stock Exchange. Whereas National Stock Exchange is where standard companies which are looking for a long-term this thing and all everything, those people will go for NSEs. That is the thing. I cannot differentiate, but commercial establishments, whoever wants to have a quicker this thing and all, those people are going for BSE. Short run, if they want to make any kind of, generally those people will go for BSE. Otherwise, people will go for NSE. That's what the difference.
So NSE is basically into long, we can say.
Because BSE movement will be much faster, because it's a commercial establishment, usually Bombay Stock Exchange, because more of trading happens more on BSE in some occasions. In some occasions, more of the trading happens in NSE. For example, capital related capital market related securities, debentures, right? So all these things happens majorly mostly on NSE. Whereas whatever the short-term gains, short-term profits, short-term settlements and all everything, for that generally we choose BSE, Bombay Stock Exchange. That's the difference. Understand? Clear? Mohsin, Havich, listening?
Yes, yes.
Listening.
Yeah.
Right. So that is the difference, because both are same, because National Stock Exchange, but movement will be much faster in BSE, because commercial establishments will be more than that. The reason why, because people who do this trading kind of, right? People who do the trading kind of companies are there, right? Those people who wants to make themselves into public limited, those companies will listed more on BSE, because they have more leverage there. Understand, right? For the long-standing kind of capital acquirance and all everything, then some people go for NS. That is the difference. BS is a commercial viable kind of. That's the reason why some people chooses BSE, some people will choose for NS. That's the difference. Clear?
Yeah.
Right. So next point, SEC filing. SEC filing. Write down. Here,
just a moment. Right.
company must file a registration statement with SEC, a registration statement with the SEC, which majorly outlines the terms of the offering, as well as discloses information
Discloses. Okay.
discloses information relating to company's financial situation, and risk factors. Understand? And risk factors. Is it clear now? Understand?
Yes.
Yes.
Right? Because risk factors has to be identified over here, right? So this is where generally risk factors come into picture, right? So financial situation followed by the risk factors and all, everything has to be evaluated. Because when will it happen? When there is an SEC filing will be taken place. Whenever we are doing this SEC filing and all that, in this SEC filing, they have to file a registration statement with SEC. So whenever they are submitting this to the SEC and all, the way where they have to outline all the information about the kind of disclosure information, because whatever the information we were mentioning is true to the fact, right? That's what we call it as disclosure statement, right? For example, when we are applying for loans and all, what is that we do, right? So we'll write a acceptance, right? So whatever the documentation are we giving is true to the extent, right? It is true and there is no manipulations, nothing, right? So that's what generally the disclosures information we give, right? Because whatever the documents I have given is true to the fact. In the same way, usually this organization has to send the disclosure information about what their organization business is, right? So what are their financial situations, followed by the kind of risk factors which was identified by the underwriters, because this underwriting team, investment banking teams, accounting team, legal consulting team, these people are working on behalf of the organization, okay, to make that organization to file an IPO. But end of the day, who has to accept that? SEC has to accept that, right? SEC has to accept this to do it. So if this SEC wants to accept this to do, generally this is all something essentially required. This is what is generally is needed. This is what generally we talk about SEC filings, all that. So once SEC filing done, next write down roadshow marketing. Roadshow marketing, please write down. Once SEC has cleared the offering, the underwriters followed by remaining, right? Team. Underwriters will go for roadshow to market the stocks to the potential investors. Because roadshow marketing is required. For example, you are the person. For example, both are you are active investors, for example, right? Active investors in stock market, right? All that, right? So for that, you are using a financial broking company, for example, right? Some XYZ, right? You are using it. So what is that you do? They will send a regular insights, and as well as regular insights about the stock positions, right? Stock market tips and all, everything they will be sending. Am I right or not? Stock broking companies do that for their customers, whoever is investing through their stock broking companies and all, everything. So they will send some insight sheets, all that, right? Some whatever is there, is any public balance sheets were published, right? So those documents, right? How the stock performance in last 1 month, 2 months, 3 weeks, right? That's how generally 4 weeks. That's how generally they publish. So along with that, even a stock market, stock broking companies will do the roadshow marketing also, because people should know, people who are investors, that to active investors should know which IPO is going on, because there are hundreds of IPOs goes in regular intervals, right? Because how well they have to market themselves is important. Otherwise, how come people know? Because organization wants to plan to invest on, plan to enter into an IPO, right? Initial public offer is what they want to do it. So for that, what is required? Marketing is needed, because they have to promote their organization, because which organization they were belongs to, what are their credentials and all that, right? What are their success stories, all that, and when are they going for, when are